TGIF Warriors, we made it. When you think about it, coming into this week with all the central banks meeting, I thought it was going to be a bigger week. When you look at your charts and this week's ranges, not much happening for this week. Hi, Hugo, James. Thank you, Bran, Mike, RJ. Okay, so let's get the picture. Hi, Stel. Hi, Blake.
Hey, coach.
How you guys doing? Hasn't it
TGIF,
been that
buddy.
kind of week? I mean, really, the market held. That's all it did. Okay.
You know what I think it's waiting for? I think it's waiting for next week because the tariff risks come back into view next week. So maybe this week was a bit of
Hang week.
yeah, like a consolidation week. Obviously, you can see it in the dollar index as a clear example of it. But also, next week, obviously, the risks start percolating. But today is triple witching Friday, so we've got maybe we get a little bit of a breakout today, Dale.
In the dollar. If it gets through here,
Yeah,
it
I
could
mean,
squeeze it.
you never know. It's probing actually going the other direction right at the
Oh
moment.
yeah, it could go the other way and break down again.
Yeah,
Yeah.
yeah, I don't know. We don't have the data to really support a move like that, but with really just looking at like we have Canadian data and that's pretty much it. I
This
mean,
looks decisive. This is really probably the most decisive thing because I mean, how many times was it knocking at the door? Stel called it right. It's a little tricky. I mean, it looked like it broke down and then closed back in it, but following through. So I think the lower yields scenario is on. Look, the bonds are, put in a lousy day, but they've done nothing wrong. So I think that's part of it. And keep in mind now, I'm starting to hear, I've been talking for a long time about that there could be some type of military strike against Iran, Trump. Now we have something else in the background, a 2-month ultimatum sanctioning China for using Iranian oil at one of its oil processing plants. So, the seeds are the preparation. Um, People could say, yeah, it's a gimmick to try and get Iran to not develop a nuke. Well, I don't know. Okay. I don't think that's going to change their mind, an ultimatum like that. Anyway, so we'll see what happens. Just something else for us to, have to put into our thought caps. I think maybe that's why crude has been popping. Maybe this was the bottom. I was looking for one more flush, and you know, 62. I'm still waiting for it. I may wait for it for another decade, but I'm going to try and just stay disciplined. It's actually a 2-week reversal, but I sure would like to see one more capitulation and take out all the stops left here. Um, so that's something. There could be a play in energy. I hate to be like the guy in Billions who made a lot of money shorting airlines on 9/11, but it is something to put in your trading cap. Stel, you want to take the screen.
Yes,
This
sir.
this to
and
me
but
looks like just a little pullback and so a low resting week. I really thought that and I still think that we're going to take this high.
Well,
Anyway,
yeah, let's have a look at those one by one. Let me take the screen. Don't have that much new stuff to show, but I'll just go very quickly through a few things. You showed yields correctly saying that they nudged up there quite a few times now. I mean, you look at this chart. This correction here does not look bullish in any way,
no, it's a
and it's a
flat.
similar story to the Dixie. Again, this looks very kind of sideways, creeping lower, and then getting ready for the next leg lower. That still remains my core view. Of course, I could be wrong, but that's what I think is going to happen for both yields and the dollar. Um, and we are at very close to very important levels on these things. The one thing that kind of baffles me a little bit is equities.
Funds. Oh,
Um, I had said for a while, right? I will only be convinced that we are starting a leg lower if we break below 56.70, 56.80, which was previous high. We broke, we retested, and I said, remember on Face a few
yeah,
days ago,
I
I said
do.
I think this is going to be a great chance to short. I did short. I put a pip in play, a pattern in play, 56.65. It went down. It was really good, straight down, and then it just went up. I put my stop to break even. I got taken out, and now it's back below. So I don't know what to do with this. And the main reason is that for me, the Fed um, reducing the quantitative tightening pace from 25 to 5 billion is a big deal, and the market doesn't seem to be caring much about it. For me, it's a big deal because it is the first step and almost last step before they.
Joseph Wang agrees with you, by the way,
Oh,
Stel.
does he? Okay, I like
Yeah,
that.
he said you may as well say that's the end of QT.
It's the end of QT, exactly, and it's the one
Yeah.
step before they start over again. And we know
Right.
they're going to start over at some point. So for me, this is bullish. It's bullish risk assets, and markets are not buying it yet. So I'm a little bit torn with the S&P and with equity, so I'm not doing anything with those. But we do remain below 56.70, which for me is the point, kind of like bull bear line, but we're too close to it.
Look, put up
So,
your weekly for a minute.
yep, sir.
Okay. So what we have is an inside week.
Yep.
Okay. The most bearish thing the market could do next week would be to take out this week's highs early in the week, and then by later in the week take out not only this week's lows, but of
But the
course,
previous one as well. Yeah.
yes, but it's set up for an outside candle. It could
Yeah,
happen the other way too. We could
of
start
course.
lower and then end up with a bullish engulfing candle. It could go
Yep.
either way. My bias is there's still too much damage done in the market, and the Fed hasn't even started. And I think there's at least another wave similar to what we just had after a bounce.
I wouldn't disagree with you. I think you're probably right. But just the Fed kind of
Yeah,
worries me a little bit with what they
yeah,
did in terms of the to the bullish side. But let's see. Oil is very important for me. I've talked
yeah.
about this many times, and I still think we're going lower. We're going to break lower, and if that happens, or when that happens, then that's going to take. We're going to see a lagging effect of prices of inflation, likely showing, lower inflation, disinflation. We're not going to get to deflation, I don't think, but oil is very important, obviously, um, for the price of everything. So,
Hey,
Yeah.
hey, Stelios,
sure.
does that bother you with I know you're always a US dollar Norwegian krona bear, which I think right now is the time to be. Does this crude oil move disrupt or change your view on Norway? I mean, because if equities are, let's say they're just weaker, and then you've got crude oil that looks weaker, but you look at the Norwegian krona, it looks so freaking strong. Anyway,
Yeah,
I don't know. I know you're covering crude oil. I just wanted to ask if it's
you are
ch going to
absolutely
change your
right.
view on Norway.
You're absolutely right. It will make me less bullish Norway. But, if you do this USD NOK and you make that, there is a correlation, but it's kind of, I don't know. It's what did I do? I did something wrong, didn't I? Hold on. If I add that, just NOK, new price
No,
scale.
no, you got it.
I
It's
got it. Oh
yeah.
yeah, there it is. Yeah, there it is. So, there is a correlation, but we've been kind of drifting lower in oil, and dollar Norway has not been going higher. It's been going sideways. So yeah, it will make me a little bit less bearish dollar Norway, but I still think the fundamentals are there for Norway. Of course, they've been there for years and years, and this is not breaking decisively lower. But having said that, look at this trend line. We are exactly there. So uh, decision time.
Yeah. All right. All right. Just
Um,
curious.
yeah, and metals, I'm not going to say anything new. It's still looking bullish to me. Of course, silver is retreating a little bit, but it's still in the middle of this channel, so nothing to do there. Gold is hitting new all-time highs. Nothing changed. So I'm not going to bore everybody with the same stuff again. Um, I'll pass it over to whoever wants to take it over.
Well, I
Okay.
can grab it from here, but before I do
Unless you want
that,
me to see something else.
what's that?
Unless you want me to have a look at something else.
I was going to say I can take it over from here. I know
Yep.
I want to mention one thing. Ryan's not here today because he is actually doing a one-on-one coaching session with the winners, one of the winners of the non-farm payroll giveaway. And for those of you guys that don't do that, here in the next couple of weeks, we're going to have obviously the jobs report for March, and that'll be after the first of the month. We give away 3 months of to 3 different people of Forex Analytics. We give
It's
some
1 month,
free
1 month to 3 people. Yeah.
to three, yes, correct.
Yeah.
And then they get a one-on-one session, or they can take some time with PIQ Suite. So he's doing a one-on-one session right now, and it's with somebody in Europe, so they couldn't do it at any other time. That's why he's not here today. So make sure you guys do those sweepstakes or the giveaways, because we do give that away. As speaking of which, some of you guys might have remembered the Gelber group. Do you guys remember when we let me see
Yep.
you guys remember when we did the Gelber group, and we did the getting you guys ready to trade for this group, and we did a big competition, and we helped promote it, and they actually had 40 people in the competition. I think I jumped in the competition just to do it. I think I got like seventh out of it. Was like a month and a half. I wish I should have focused a little bit more on it. Anyway, I talked to uh, the guy yesterday that I've talked to over the last 6 months or so, that I got introduced to from my trader friend in New York that I traded with for 5 years or whatever. Anyway, they're going to do a second competition. They're trying to talk it out, but him and I know, it's a very very long story, but my son is dating uh, the daughter of a previous trader at Gelber Group that lives just down the street from us now, and he traded here for after he left Morgan Stanley after 25 years. He traded at Gelber for like 5 years before he moved out here. So anyway, it was really interesting. Had a conversation with him, but I wanted to let you guys know there will be another trading competition. They're trying to open it up for, and I don't want to give you, all the details, but they're trying to open it up, because I'm like, could you try to get out of the U.S. and offer it to European traders as well, and Asian traders, and they're exploring those options. So I just want to let you guys know that don't forget about them. And they actually hired 2 of the traders from the competition last time. So for those of you that don't know that, they hired 2 of the traders from that competition that entered, and hopefully it will give you guys and gals some opportunities as well. But anyway, I just want to let you guys know that because I had a 45-minute conversation yesterday with him. Um, let's talk about some other things that are happening right now. And Dale, let's talk about the S&P. And I know Ryan, sorry, Stelios. Stelios said I'm really not too sure what to do with the S&P. I'll tell you what I'm doing is I'm shorting risk right now. We have this bear flag pattern. We are not even able to get above the 38% retracement.
We didn't get to 38.
We haven't even got to it. Yeah.
Yeah.
Yeah,
Yeah.
I know. It's a very, very shallow retracement. And yeah, I know. What day was it, Dale, that I dropped the F bomb? Was it like Monday or Tuesday? One of those days. No, it was ahead of the Fed. I was like, the problem with this market, and I will reiterate, and I will not drop an F bomb today, but you take post COVID, we were down, we went as low as 2,200 in the S&P. We're up
Yeah.
184% from that low, post COVID low. in 2020. So in about 4 years, 5 years, we're up nearly 200% from the lows. That's unheard of. And I was talking to actually another guy that just retired from he's at my gym. He just retired from not Fidelity. There's a one of those Fidelity or Vanguard. Their office is right next to my house. One of their offices here, and the guy that was on a trade desk for like 25 years, he just retired, and he's in my gym, and we were talking, and like we were just talking about the unprecedented moves that we've seen in the last, since the financial crisis, really since 2008. And so now you have all these people that are really conditioned to buying 10% dips because we're going to go back to all-time highs. I do think this time is different, and we are seeing a 10% correction. And the reason why I think this time is different is we're getting, we're obviously our balance sheets are this government's, hell bent on trying to reverse or reduce our balance sheet, but also there's going to be a lot less fiscal spending here, more fiscal spending in different parts of the world. Speaking of like Europe, Germany, everybody's going to be doing defense spending. And as a result, you're going to have US equity markets underperform. But that Pavlovian response of buying equities when they're lower, when you drop 10%, it's
That
a
has to
natural
fail a
reaction.
few times
Yeah,
before
yeah,
they
you
give
got to
up.
stick your
Yeah,
hand in the fire and go, "Oh my God, that hurt."
yeah.
And you're gonna have to stick your hand in the fire or in the elevator, and the elevator actually shuts on your hand before you realize, oh, I shouldn't be doing that. And then it's going to take a while for the market to get that response where, oh my God, that didn't work. And then you're like, okay, well, we've had a 15% correction now, let's buy it again. And then that doesn't work, and you finally get to this channel support, and then you finally get some stability. But now that it's changed the dynamics of the market and the psychology of the market. And that's why I think we are forming a major, major high in the markets here that probably won't get taken out for a while. And a while could be, a year, or it could be 5 years. I don't know. I can't look ahead that far in advance, but I think this is where we're at. Had this conversation over the last couple of days on our daily roundup show, which is our private show for Forex Analytics subscribers. If you guys are, you have your $1 trial and you got 10 days of Forex Analytics. Make sure you're listening to the Morning Edge and the daily roundup shows. Those are private shows, but we've had these conversations, and kind of a roundabout. I would say a roundabout. It's more of a fireside chat with our traders every day. And if you miss it and you can't listen live, you can always get the recordings right here for our private traders. All right, and
Cool.
our clients. Yeah, it's all right there. But we've had these conversations because I think it's important that you guys have a decent framework to work with. Do I think we can even bounce from here? Sure, but I do believe that we are trying to form some sort of major top. What are your thoughts, Dale, as far as the markets go? Where are you at as far as thought process here?
Pretty much the same page. I was on a Real Vision and called for the low on the lunar eclipse, looking for a 2-week recovery, and then another wave down to 4,800 by July.
Oh,
And
4,200.
then I could go forward. Then the bazookas have been firing for a while, and then we'll see 7,000.
4,200 by
No,
July.
48. 48.
4,800. Yeah, well, that channel support. That's pretty doable. Let's look, let's take like this low from COVID, and because I think that's obviously significant for everybody to be looking at. You look at just simple Fibonacci's from there. The 38% retracement takes us down to, 4,600.
46. Mhm.
And
Okay.
that's keeping us in a bull trend. If things are really changing for long term, we could see maybe the 50% retracement, maybe the 618 levels that we saw back in 2022, where people were really worried about the market, and that's 3,700 now. Now that's pretty far from where we're at. I mean, you think about from a percentage standpoint from the highs, that would be a 40% correction. I think that's a bit of a stretch, but anything can happen. I
I
mean,
think, yeah, that's possible.
it's possible, and we have an administration right now that is disruptive, and that's the outlier, right? That's the risk at the moment. So, at Stelios, what do you think about the longer term views of the market, and where do you stand?
I think that as long as we see these deficits uh, persisting, and remember, last month's deficit was announced a week ago, and it was 300 odd billion in the US, more than expected. So as long as this remains, I think the medium to long term move is going to be higher. The question is, how low do dips go? And the problem is that everybody's waiting for a dip to get to load up again. So I think
Well,
that
that's
for
the issue,
for
right? That's why I think you keep selling rallies, even as shallow as they are, because everybody's loading up and everybody's going to stick their hand in the fire. Everybody's going to get burnt and everybody's going to go, damn, that hurt. They're going to have to do it a few times before they go, oh, well,
yeah,
I don't want to do
You
that
know what
anymore.
just one thought flew across my head. When
Yeah.
Besant came out and said that, we're not going to focus on the Fed, we're going to focus on the 10-year.
I'll be back
That,
in 1 minute. Sorry, my phone is ringing. I'll be back in 1 minute.
okay.
1 minute.
Okay.
I believe that sealed the deal that we don't care what happens to the stock market. We'll even take it down so that there could be flows into the bond market. We'll create the demand by weakening the economy. And that's how they're going to get the 10-year down. If we go to 4,800, you would think we'd have a pretty good, maybe the bond TLT gets back to 120 in a scenario like that. Or, if it, rates are, I don't think rates are going to go up during this next phase of risk off. The bonds, they look okay. And they haven't done anything great on the upside. But if we bounce here, Blake, and we fail, and I can't even rule out in a week that we get to 50% retrace. We could sell I'd like to see one or two sharp rally days next week to do it. The solar eclipse is the 29th, so that's on the weekend. And some people think it'll be strong until the end of the quarter and get short on April Fools.
Yeah, maybe that's it. Maybe
April
that is
Fool's
it. Yeah.
high coming up,
There's a here. I'm gonna take you over to the Forex Analytics chat room, guys, and just this is that's from a mirror, by the way. If you go over to the news and research room, and there's like pieces of research. I'm gonna see if I can find really interesting piece from earlier this week.
For the record, guys, by the way, I agree with Dale's 4,800 level in the S&P. That's the level at which I'm going to start to get interested.
Yeah.
So
We'll see if it happens.
you should see, like, you guys should read this article. You go in the Forex Analytics chat room. You probably find it on the ING website about the Mar-a-Lago Accord, and kind of like their questions on it and stuff. It's really really interesting read. Again, if you go in the news and research room, you can find this information. Obviously we got the trades room, which is always fun to be in, because you can see what open positions that I have, and you can see what Ryan's doing, and usually K-Man's very active in here, and other traders too. Obviously, there's a lot of different traders that are posting in there. But this research piece is actually pretty interesting because it asks a lot of the right questions, in my opinion. So yeah, make sure you read it when you get a chance, because I think it talks a lot about what would happen with treasuries if there is a kind of a push to basically it talks about like the century bond and what that would do for treasuries and what that would do to the dollar, and why they're trying to weaken the dollar, why this Trump administration really is. And that's why you got to really stay defensive. You know what I wouldn't do? I wouldn't actually be long the dollar overnight at any time at all. Like, that's one of the things that I've kind of promised to myself. Unless I'm in a really positive position where I can put my stops at break even and I'm up 100 pips or something, I will not go home. Go home.
Probably
Long
good advice.
dollars.
Why didn't you tell me that Monday?
Well, we talk about it all the
I know.
time.
I'm
Dale.
kidding. I'm kidding.
You know,
I'm kidding.
because the fact is, you could wake up one morning and everything could be sideways, and
I've
at
had
any
those
time.
mornings. You know.
Yeah, it could be it, and you know, what I've learned is a lot of that stuff happens when I'm sleeping. So it's
Yeah.
always just my luck. You know what I mean? I get up and I'm like, oh my God, I just missed a 300 pip move. What happened there?
Yeah.
Um,
Yeah.
so, but anyway, look at the euro. Look how well it's holding up. I am playing it to the long side this morning. I started buying it, you know, as it was down here. I
Yeah.
think the euro's just in this really little consolidation. Remember, we do have triple witching today, but we should just discuss really quick because we got Canadian inflation coming up. The Canadian dollar played out perfectly yesterday to what we were discussing. If you guys are, you know, again, if you're in Forex Analytics, you can just go back and read what everything that we've written on the dollar Canadian. You go to basic technical analysis, you can talk about yesterday. Um, you know, uh, Yesterday we were looking at the loonie may be nearing triangle resistance. And you can see we were coming up towards triangle resistance.
Yeah.
Then the next chart, it's like, boom, we just rejected it. We hit the 50% retracement and came right back down. And the reason why that's so important is because now we know where our boundaries are for the Canadian. And I can just delete this and say, you know, above 144, this is where the Canadian turns bullish.
Yeah.
Now you guys can have your, you know, opinions on, well, the Canadian's going to do better, it's going to do worse because of tariffs, because of Mark Carney. Yeah, whatever you think. But I'll tell you what the market's thinking is probably a breakout above 144 is pretty bullish,
Yeah.
and a
Right.
breakdown below 142.50 is bearish. And
Right.
that's all. Like, again, you can have your opinions, but opinions are like assholes. Everybody's got one. So, you know, hey, so there you go. You have your opinion. Great. So do I. So does everybody else. But the market's going to go and it's going to break one direction or the other. And you can think you're right, but ultimately the market's right. So, you know where your break points are. These are your break points above 144, below 142 and change. That's when things get, more, volatile. And I don't know if today's going to be the day that we get the break, but I think that's what we should be watching, and that's what we're going to be watching now. Hey, before we wrap things up and go into Canadian CPI, Dale, what are your last thoughts going into
That's
triple witching today? Anything that we should be watching?
Yeah, you know, my schedule is for next week to trade that inside week and sell strength and risk. Next week, I still think there's a small shot that we could get through that 10, what is it, 360 and pop to 460.
Yeah, right.
Uh,
Oh, wait, are
and,
you talking about the S&P or are
well,
you
the
talking about?
S&Ps, both. So
Oh, yeah.
I think part of the reason the S&P is stabilizing, I'm testing this theory. I believe that the regime of dollar weakness being risk on is over. And we actually, if
Oh,
you want the
yeah.
market to go up, you need the dollar bounces so there aren't outflows and there's money at least staying. So if the dollar rallies maybe to 100 points from here, we could get a lift and see, it's either going to fail at 780 or 860. And 920 wouldn't buy. I mean, I have a lot of confidence at 920. I know it's hard to believe that could happen in a week or so, but I don't know. What if there's a peace deal, which looks completely unlikely right now with Ukraine? Anyway, I'm just looking to sell strength, and I like shorting Apple. NVIDIA has really recovered quite well, but I think 130 is the battlefield for NVIDIA next week. So those are a few things I'm looking at. And B of A selling 61.8 retrace. So
So,
those are my
Stelios, I'm going to get
thoughts.
your thoughts too here in just a second. And thank you, Dale. I'm just going to keep it on a 1 minute chart over here, and I'm going to bring over the data flash, and we'll just see what happens with the cat. I don't think we're going to get a huge reaction here. Oh, I thought it was CPI. It's retail sales, and
Retail sales, yeah.
there's not going to. This is going to be such old data. We're not going to see anything. But you never know. I mean, maybe the market takes some data and runs with
They
it.
need something.
Yeah, market's looking for some weaker data.
It needs
So
some Red Bull.
yeah, maybe it gives you
Okay,
wings.
let's see. Point 2 core is stronger than expected, but it's not really going to do much, is it?
No,
No, Royal.
it ain't gonna
But
do
I tell you
anything.
what, though, I am in general bearish the dollar, but not against the Canadian. I think the dollar CAD would be one of the
Yeah,
pairs that I would be long against dollar shorts.
I
Really? So
agree.
you would be okay. So you want to buy Canadian dollars.
No,
Okay,
No,
you
I,
want to sell Canadian
USD
dollars.
CAD.
I
Yeah,
want to be long USD CAD, and I want to be short pretty much every other dollar pair.
You know, the I think we have to, I think it's too early to call. First of all, I've been a big fan of the Trump Trudeau you know, big swing and dick fighting that they've been having. But now that Trudeau is gone and you got Mark Carney in and he might, continue on as prime minister, hey, I mean, maybe things will be better, and maybe
But
Carney will work
Mark Carney, seriously, you remember
yeah.
what he's done at the Bank of Canada and Bank of England?
No, he's made a mess of things, sure, but you never know. I mean, maybe he's a better politician than
it'll
he
be
is
easier
a central
to
banker.
it'll be easier to absorb Canada, and they could use the U.S. dollar. They don't need the Canadian
Yeah,
anymore.
I don't, I don't have
I
much of
mean,
an
who
opinion.
needs a currency called a loonie? Isn't it
I just
crazy enough out there?
I'm just wondering if he could actually, make the situation a little bit more calm. And if he manages to do that, and I know most Canadians probably wouldn't like that if he kind of kissed the ring, if you will. But
Oh, he won't.
if he did, the Canadian currency would strengthen, obviously. Where I get really bullish, the dollar CAD is back below 140. I mean, this is where, right here, if you get back below that, then it's like a free ride. Then you go, through the 200 DMA and it's off to the races. We're going back to the low 130s. There's a lot of work to do between there and there. So I get what you're saying. The idea of this right now seems more logical to me at this moment.
Yeah, me
I
too.
hear what you guys are saying. So
Yeah.
Yeah,
For
and,
now,
and
given the information we have now, I think that's the way I would want to be. Of course, things change, our directions change.
yeah. And I
yeah,
think the market's as confused as we are. I mean, we're sitting here now not being able to agree on something, and the market's clearly telling us that that's what it believes too. Not sure what to believe, right?
Yeah.
If that makes sense. So, all right. And Stelios, what do you think we should be kind of focused on today or maybe going into next week? Any thoughts or ideas?
Uh, I mean, for me, the thing I'm looking at is still yields because we're very close to breaking down, and yields drive everything. So that's what I'm looking at. If yields drive lower and break lower, then I think that's going to give um, some strength to equities, to risk assets in general. But yeah, that's the one thing I'm looking at. I'm not looking at anything else at the moment. Yields and oil, those two things, because they're closest to their breakdown points.
Yes, and definitely crude. And I know we posted a chart in crude oil today, and if you guys haven't seen it, I'll just go ahead and pull it up over here. So, I mean, crude is threatening. It's
yeah.
these levels. This even last night in Asia, we were up at that 68.50 level, probing that previous support and that 24% retracement. So obviously, if we get a recovery there, it, unlocks some upside. But that 62 or excuse me, 65.50 level is such a massive support. If that goes, my assumption is we're probably going to be testing 60 sooner rather than later. And then Dale, you might actually get sub $4 a gallon gas in Southern California. Never know.
No, prices come down on a parachute.
I know it seems that way, doesn't it?
Up on a rocket, down on a parachute.
What I just real quick before we wrap things up, next week, I think, as far as data goes, it's actually a fairly important week, especially coming into Monday. We've seen, and I think we're going to continue to seen, to seen, we will continue to see the U.S. exceptionalism story continue to wane. And next week, at the very beginning of the week, we have European PMIs, UK PMIs, US PMIs, and the dollar. Let's not ignore the fact that it sold off really aggressively. As Gregor would probably put it, it's been an impulsive move.
Yeah.
We are consolidating at our lows as relative strength has been working off oversold conditions, which this is how you get trending markets. If you guys don't understand technicals or how to read relative strength, or how is that moves can continue to go up or down, but relative strength, it never works. No, it's working just fine. You sell off, relative strength gets oversold. We start to see divergence. We get consolidation. RSI works off consolidation, like you see here. Then we get into next week. We see a new low in the dollar index. Relative strength dips to a fresh new low, and next thing you know, we're seeing levels that we haven't seen since, I don't know, 2023, and then the dollar index continues its downward trend. I'm not saying that's going to happen. I'm saying if we get weaker U.S. Growth data, especially with like PMIs versus Europe, you're going to see that dollar take a new leg in that direction. That means the euro's trading towards 110. Now, here's where the rubber meets the road, and I want to make sure that everybody sees this chart. And actually, this is the chart that I want to do. Let's look at look at this chart. This is the weekly euro dollar chart. And ever since Giselle said she wanted to get paid in euros, that was way back here in 2008, and top tick the euro. We're getting close to that trend line, which comes in around 111, say roughly. 111 is where the rubber meets the road. And Stelios, believe it or not, I think it's time for you to start thinking about and plotting your trip to the United
the
States.
US.
Because,
Yeah.
I think the euro is going to be trading probably 115 to 120 by year end, and this is going to give you a great opportunity to spend your euros wisely. What do you think?
We are definitely going to do that. We said with the kids that we need to go and visit New York and the US in general. Maybe Arizona
Yes,
as
and
well. Yeah.
everybody's got to see the Grand Canyon. So
Yes.
I'll take you on the Steve Volge ×2 repeat tour to Vegas, and and maybe we'll even hit Disneyland with your daughters. That would be great. But yeah,
Nice.
come visit, because I believe that the euro is actually going to be threatening a breakout, and those are levels that I think we need to be watching. Once we get towards 111, I think it's going to be a big deal. And I don't know if we're going to get there next week, but I think there is that risk. By the way, equity markets are on their lows right now. It is triple witching, and this market does look weak. And don't forget that the bear flag pattern is in play at the moment. So if you guys are want to know where those targets for the bear flag are in the S&P, it is pretty far down, like 5,100, I want to say. Yeah,
Well,
about 5,100 roughly.
Almost at 4,800.
48
Close.
is the number.
Yeah, and
Yeah.
it's not like it's going there tomorrow, and it's not,
No.
not next week, but over time, 5,100 would be doable to complete that bear flag pennant, whatever you want to call it. So, I think that's the risk, but we'll see. It's triple witching. That means it's going to be a crazy. Is it a lunar eclipse or any other astrological
No.
sign we got going on, Dale?
Solar annual solar next week.
Ah, okay. Well, then that's what we'll be focused on then. Annual solar eclipse.
So it's
Awesome.
complete the eclipse season.
Awesome. Hey, before we go, I just want to say, trader funding program on our one-step assessments. There is a 30% discount for until when?
The
Stelios, you
30th
remember?
until the 30th of March.
Till
10
the
days.
30th of March.
10 days from yesterday.
Not on the instant funding. So if you guys want to go instant funding, there's no discounts on that because it's a brand new program, and it's with the take up that we've had is pretty amazing, because you're like, oh, I don't have $100,000 account, but I want to access 100 grand. Well, there's your, as long as you got good risk management skills, this is the place to be thinking. So, Check out the trader funding program. You guys got some discounts going on till the end of the month. So take advantage of it, because then you get inside of our community. You can be, chatting with us and, seeing what we're trading and, sharing ideas. And yeah, so I'll look forward to seeing you there. All right, Dale. Well, I think that's it. Happy Friday.
Okay. Well, thank you, team. Stel.
Thanks, guys.
Yeah, good
Yeah.
having you around a few times this week.
Yeah.
And Blake, when I sit here and I watch you go over markets and your charting, people don't realize that they're watching a master in action.
Oh,
Maybe
thanks,
they do
Dale.
realize it, but and you do it live, and some of your macro longer term looks like that euro should kind of excite people that we're really at the big wave 3 coming out here in the euro.
Oh,
120 looks viable to me. It's a lot of pips between here and there, bro.
shoot. Yeah, man.
So
Breakout, boy.
yeah, I know that we'll be on that side. We have been. I can't remember last time we were bullish the dollar. So all the way back to the tariff announcement day when Dixie was 109 something in your face if you were a bear. And
Yeah, we were talking a
never
base in the
flipped.
euro dollar when everybody was
Yeah,
talking parity, right?
102. We
Yeah.
talked 102 4 months in advance
Yeah.
before it got there. And
That
then
was
it
your
gets
call. That
and
was
then
your
it
call.
gets there and no, so you're a little hesitant. Now it's at now you want confirmation.
Right.
You were so
It's
confident I'd just buy it, but it got long down there.
yeah.
So
Yeah. I mean, hey, you were playing it long down there. We were all talking
yeah,
big base in the euro. No one expected the German announcement like that. I mean, come
yeah.
on.
So I mean,
But that was a
this is a
gift.
big yeah. And if you're an American, man, you're talking about the dollar. If it goes to 95, that's another 10%. You have to make that up. So between a weakening dollar and tariffs, I don't see prices going down. So it's almost like we just have to uh, make more money. And the markets are setting up where we're coming out of ranges and big advances and declines ahead. This is when you make hay, when the sun shines.
That's right. That's
And
why
yeah,
take advantage of that volatility. Yes.
yeah. And join the community. Where the best one is, but you can, be in a
Join
community right now. You need support.
join any community. I mean,
Yeah.
ours is obviously we can be biased
It's
and
the
say come
best.
in
Ours
ours,
is
but
the best. There's no
of
doubt about it. But
course.
I'm being completely objective. So,
Come chat
any,
here with all of us and talk different charts and what everybody's looking at and how they're looking at it. I mean, look, these are not my charts. Like those
yeah,
that's another trader's charts.
I like
And
that.
come
Yeah,
share your own ideas with
yeah.
us
It'll
and have a
sharpen your
conversation.
skills when you're accountable,
Yeah.
even for showing your work. You want to show your best. You'll rise another level if you participate. All right.
It,
Well, that's a wrap
they,
for me.
Yeah, I was gonna
Mhm.
say one last thing really quick. I've been trying to figure out what would happen if equities really sell off. Where's the money to be made in FX? I think it's in the yen. I think you
Yeah,
sell yen pairs or you buy dollar yen.
yeah,
And I'm short dollar yen right now, but what I wanted to just show you really quick, as equities are selling off, what you're seeing is look at all the yen pairs and the flags that are breaking right now. I mean, this is the
yeah,
euro yen, just show you.
yeah,
That's the euro
yeah,
yen. Here's the pound.
yeah,
These are all charts we pulled up last night in the chat
yeah,
room. So
yeah,
pound yen's rolled over, Aussie yen, pennant rolled over, New Zealand yen, pennant rolled over, Canadian yen, pennant rolled over. Now this,
yeah.
you're like, oh no, you didn't talk about that last night. Oh yes, actually, you can just go to last night's charts and go, all bear flag or pennants in the yen pairs. There's the
When it
Canadian
was
yen.
there. Yeah.
Here's the pound yen. Here's the Aussie yen. Here's the New Zealand yen. Here's the euro yen. So if you want to be notified before things happen, like
Yeah.
last night in Asia, come be in our community. I mean, hey. It's only
And
$1
don't
for 10
forget,
days. Try it
you
out.
know, we don't talk enough about this, Blake. A lot of people don't like to be tied to their, you know, where they trade. And you know, the app, you could be living your life and know that there are eyes looking out for you. You'll get a push notification if there's something important happening.
Yeah, like a new update for, harmonic pattern in silver. I mean, hey, cool. Just came to your phone. That's awesome.
Yeah,
Anyway,
that's a big deal, I think.
me too.
Getting research sent to you. All right, well, don't just count all of Forex Analytics great tools besides the community. Count your blessings, and have a great weekend. And see March Madness this weekend for Nostra Pinkert. I don't bet on sports because I'm
Yes, you
nervous enough all
do.
week. I don't. I don't.
Me
I
neither.
need to relax a couple days a week. I don't want to care about the outcome except if I like the team. Anyway, have a great weekend, Blake, Stel, everyone out there. I have one more favor. All you guys out there, how about sending out a tweet? I know a lot of you guys you follow us. Put out a tweet to the X world and tell them what you get out of being in F.A.C.E or being part of the Forex Analytics community. Because just think that if you didn't find this place, um, you probably needed someone to tell you about it. So spread the word, and that's how you could say thank you to us for the work we do during the week for you. Okay. So that's a wrap. Everyone have a great weekend. Enjoy, and we'll be back here to do it all over again next week. Have a great weekend, Blake and Stel. See you guys.
Thanks, Coach. You too.
All right. Adios, everyone.